Good morning and welcome back to the Opportunistic Trader for Tuesday, January 8th, a green arrow day in the S&P. We got stopped out of our position basically on what will be probably the high of the move, but we actually probably let it go a little too long, longer than what we like. We couldn't finance the position. It's a lesson using options. They didn't give us enough to finance the position. So we're at square one. Been in the trade for 2 days, which is probably too long. And we're on to the next. Overall, the dollar's strong, the market goes up. If the dollar's weak, the market goes up. We're back in that 2018, 17, 16, 15, and all the way down to 2010 mantra of no matter what it is, it's good. So the market somehow is up 20 handles today. Mike told me it's because of the trade talks going extremely well, but again, I don't even know if there are any or where they are or who's doing them, but they're going well, I guess. And I don't know what the next thing will be once they do a trade deal. What'll come next? What the worry is, maybe Powell will change again what he said 2 days ago. He's known to do that. I don't know why he changed what he said when really he should raise rates, and the economy is strong, and the jobs numbers showed that. So we'll see. But overall, the market starts up 18 handles. Yesterday was an interesting one to me. At 9:30, the market opened up and then traded lower, and then the Dow was 150 points down on the day and ended up finishing up 100. It sold off at the end of the day. So a little of this is take back. We were at 65 yesterday, so it just takes us a little through yesterday's high. Overall, I'm sure Vince in his gold fix talked about the movement there. Couldn't break out higher, but I'm curious to know his thoughts again on that, on the AM roadmap. And bonds are down 7, but actually higher than where they were in the aftermarket. Again, we got stopped out, kind of bummed out about it, and just trying to figure out opportunities, which I don't really see at this point in time at a 20 vol. Vol is literally almost in half of where it was 7 trading days ago. Pretty amazing that they could pull this again. And we're 10% off of, higher than 10% off of the intraday low made on Wednesday a week ago. Or Tuesday night a week ago. So that's sort of the synopsis. China, somehow China talks are going well, but China's actually lower. So they must be going they must be going really well. Their market ended lower. So that's the only real takeaway. The dollar is a bit stronger today. It was a bit weaker yesterday, so it's really a bit of nothing and has no market relevance. I really can't see what is. I guess it's oil. Oil's come back. It's trading almost at $50 a barrel again, up from 42 and some change. These markets are swinging 20% left and right and all over the place. So there's good trading opportunity. We just over the last couple of days haven't been able to capitalize. We started the year off okay. Basically put us back to up small, and that's that's what I'm seeing here. I don't know, Vince, if you have any thoughts. Individual equities are up, but they're not up very much. So
to start with your comments about trade and your comment about regardless of the situation, stocks go up. We joke about that a lot, but this is proof positive when you look at something like this. The stock market is stronger, and you can see a headline that's on Trade Talks, but I don't believe it's on Trade Talks. And here's what I'm getting at. Trump is putting out a lot of talks with China are going very well statements. He put one out 18 minutes ago. And when there is hope in the market of trade resolution or some sort of closure, you see stocks rally. You see the dollar back off because that would be easier. You generally see the dollar back off, and this is unrelated to PAL, because that means there's going to be a loosening and more cash flow, uh, and you see gold rally. However, we see stocks up and we see gold down. So I think stocks are doing what they want to do because they want to do it, because someone wants them to go up. I'm not one to usually just subscribe to across the board statements like that, but I think cash flows are coming into the stock market now, propping it up, because you have good news coming out of potential good news, I should say, coming out of Asia. Maybe if the market's going to disbelieve what Trump is saying, well, why would it be gold and the dollar and not stocks? That would be a better tell. So,
But this is sorry to interrupt you, but
No, no,
this is dislocation. So basically, they just rallied the S&P 200 handles. So if it doesn't go as smoothly, it's a sell either way. But what happens is we're so far from the low, that we
right.
can't get there. There's no chance. But what was really more interesting on my drive home last night, which isn't too long, so I didn't really have to do any deep thinking, but I
Okay.
was thinking about the market, and we were literally in a bear market in the NASDAQ for one day. One day. The S&P futures were basically in a bear market for one day. The cash, I think, was down 19.8 or 19.9, and the Dow was a little a ways from that. But how do you go from literally that, and then in less than a trading week, or a trading week, which was really light in volume, go up 10% off the low, which is half of the move that really we went down from the absolute peak. So this has been doing this literally for 10 years. It's the same trade. It's all, there's no one here. It's just algos, and you got to just step out of the way. I mean, last night's close was very interesting. Market closed weak, looked like it would trade lower today, and the market comes in 20 handles higher. That's not to say we won't trade lower later, but for now, we're 20 higher. So, we're at 25.70. I was going to say 23.70, but we were there a week ago. Now we're at 25.70. So,
just to pop in and interrupt a little bit, Tracy commented, Donald Trump came out with 20 minutes ago, his tweet, talks with China are going very well. It's like the obligatory sort of commenting on China or the wall. And, we're going to hear from President Trump tonight about the shutdown and the border security. So we'll be talking about that. The one thing we haven't gotten to this morning that I find really interesting, last night in Asia, Samsung actually guided down joining Apple and basically saying a combination of demand. The two things that I think are really interesting, they're talking about demand having an issue, and then second is price squeeze. The margins are just coming in dramatically. There's so much competition, and I'm really surprised. Samsung was down 1.5%. That's pretty not a big move. And then B, the way that this isn't affecting the broader market and or technology. Nasdaq's up about 0.8%. S&P's up about 0.8%. I thought that was pretty interesting. It affects more so than just that individual company, being how many companies they deal with, the supply chain. Keep an eye on that.
Yeah.
What are your thoughts on that?
Vince, you want to go with it?
I don't have anything, any color specifically to add on Samsung. I have to be honest, I haven't followed it that much. But the only thing I can say is there is a trend in the marketplace now that Mike is pointing out bit by bit. Other companies are saying they're not going to go for monthly guidance anymore. They're going to quarterly guidance. And I think companies are handling the potential slowdown in demand and product for their product by either guiding lower sooner, which is what I think Samsung is doing, or saying we're not going to report monthly, we're going to report quarterly. Apple's not the only one to do that. I think Ford just went to that as well. We're going to report guidance quarterly. So I think companies are starting to get ahead of themselves or get ahead of the curve in managing expectations, which leads to self-fulfilling prophecies. Analysts lower their expectations, the stock market sells off. Of course, we haven't seen that, which is what Mike's point was. But I think there's a general trend in the corporate community to widen guidance, lower guidance, or guide less than they used to, which creates more volatility. I do want to add one thing that I think covers both areas. I think I looked up some numbers, and of the, I don't have the exact number in front of me right now, but your biggest rallies in point terms have been in bear markets. Of like, I think like 16 out of the last 20 biggest rallies have been in bear markets, and that is actually indicative of a bear market. And for those of you looking for levels to sell, I would seriously watch what Larry's doing now, because in a bull market in stocks, and you can take this to the bank, you have slow, orderly rallies, and then you have violent sell-offs followed by slow, orderly rallies. That is, I'm talking to you from experience and from options knowledge. I'm basically metaphorically pounding the table here. When a market has sell-offs like we've had and violent reversal bottoms rallying, that's bear market rallies. So this is why people are saying sell the rip. So what do we have? Like what that big move we had off the ultimate lows that just touched the bear market level. I'm saying is every rally now is almost every rally is safe to sell. You have to sell the rip.
It doesn't feel so safe, Vince.
You're supposed to buy the dip first, Larry. I'm just kidding.
I'm like, it doesn't feel. First of all, I don't know if technically we were in a bear market. That's the whole scam of the whole thing is, you know, they'll come out when the market's a little higher and go, oh, the bull market's in its 12th year. You know,
Correct.
So I don't know if they're going with that. You know, the S&P just, honestly, it's the same trade year in and year out. And the truth is, knowing what I should know and giving out that information is, the fact is, the market can't handle down, number one. And number two, volatility can't handle 25, 30, or even 20. And we've talked about it on our show many times. And I said the vol can't stay above 20 because the computer can't manipulate the market at a 20 vol. At a 20 vol or lower, the computer can manipulate the market and just continue to buy or sell all day long. When we're 25 vol, which really, it's showing a 20 vol. We're probably a 16 vol right now. I mean, the vol has just gotten absolutely annihilated. We literally put up, Mike, find when that vol was 36.
It was the day after Christmas.
So what is that, 7 trading days ago? 6 trading days ago? Absolutely.
While you're looking that up, I just want to alert that the China trade talks are continuing through the evening, meaning they're going through until tomorrow. They're not stopping. That is, and when people are discussing that long, that's generally a positive sign. So that's good for maybe another 10 or 20 handles to the upside if any news comes out.
Trade said sell the rip.
Well, yeah, I don't know what the rip is anymore. I mean, look.
Dude, we just rallied 250 handles.
9 trading days.
In 9 trading days. That's not a rip?
Well, okay.
And wait, they're doing a trade deal? Amazing. I mean,
well, I'll pat myself on the back by saying when the market was near the lows, I said if we don't make a new low and settle down here in the RSI to confirm it, we're probably going to rally above. If we get above, I think the handle was 24.63, and that's the only thing I'm going to say. Yes, I'm still waiting to sell the rip, but we did have the rip. I'm scared as anyone to sell the rip, but I guess it has to be expressed with options or small, like you say, smaller volume, wider stops.
Well, question for both of you actually. We saw at one. That there was some sort of liquidity issue, oversold on the basically back selling.
I not 100% on that, but as you could see, the large hedge fund returns, which is something we haven't spoken about, have been off the chart. Off the chart, incredible. So That's the interesting thing. I think the Renaissances and all of these firms killed it. They they just killed it. So I don't know if it had to do with
Well, I saw Dalio did well. He was up like excuse me, like 14 or 15%. I haven't seen Renaissance. Are they?
Yeah, they
had
were
a
up
good month
12,
or a good year.
12, 15, whatever.
So
They
I saw a
killed
lot
it.
that actually did come in. Like Steve Cohen was flat last year, and I think he was up 10 or 12% at one point last year.
Yeah, but now he's probably up 10 or 12 right now. He
Right.
made it all back in a month. So everybody's on their highs. The shorts killed it. The longs are going to kill it now, or have killed it this month. We were talking 4 days ago. We were off to the worst start that we've had since like 1980, and then in 3 days we've rallied 100. We rallied 20 yesterday, 20 today, and 80 the day before. So we rallied like 130 SPU handles very, very quickly. So we'll see. Everything is really good for now.
Remember, Gary commented about one of our favorite stocks to track, UVXY, traded up above 95. It's right now trading 69.
Yeah, well, Vol came in that should be even lower. I don't know. They changed the weighting on that product. They did something to it. So it's very difficult to really see what that product is. But overall, that product should be lower versus what the volatility has done here. If this is a triple index. So if you're long that thing, you should be happy, because if it was the old product, it would be trading at 45 right now. So yes, it did come in, but not as much as the volatility. Volatility is down from 36 to 20. So that thing should be annihilated. And yes, it did come in, but
Just to stick on that point, Vince, are you around?
Yeah, I'm here.
On the question I asked before, what are your thoughts on December, mid-December, late December, and then the rebound? Do you think that there was some sort of program or something that got, led us to be more oversold than where we should have been, based on whether it be taxes or programs, lack of liquidity?
Well, the only way we know we were oversold is that we rallied. If we kept going down, we would have been more oversold. So
Yeah.
Right. So and to Larry's point, my answer is a hindsight answer, which is still relevant if you're looking for repetition of behavior. Traditionally, I think people look for end of the year rallies, starting around Christmas, the Christmas week, and that didn't happen. And that end of the year rally was a lack of fresh money coming in. This is opinion after the fact, right? So this is a hindsight statement. I think that was a lack of fresh money coming in, number one. Number two, a lack of ability to allocate money you already had, that you may have had in cash if you were a fund manager, because you were going to have redemptions. Number three, I look at that as a lot of hope, a lot of irrational exuberance, if you will, on Powell giving them an exit, a rally to sell into, and it didn't happen. And then again, less liquidity.
But let me ask you. Let me ask you just a question. What did the guy say? He basically just said he'll be flexible. He was always going to be flexible.
But that's my
he's
point.
the chairman of the Fed. I mean,
that's my point. He didn't change anything that he said. He may have changed some words, but his message was the same. In fact, to that point, Larry, I put together some quotes for the last 2 years on Powell, trying to determine if what was his priority, inflation or jobs. Because in the past, I've said that Yellen paid attention to data. It was jobs data. And what does Powell pay attention to? And I kept saying inflation data. So I put together quotes of his, and obviously it's put together by a human being, so you have to look at it as subjective. But everything he says, almost everything he says, leans towards worried about overheating and inflation versus jobs. And if you look at his quotes in a stream or in context, there's nothing he said that's different than what he said the first day. He's a much more of a hawk, I think, than people than the market is ready to give him credit for. And that's basically it. I mean, he hasn't changed anything. Why? But yet the market still factors in that he might change. They're always hoping for change. Like, the market is a call on Fed policy, and everybody's long that call. And that's a bad bet. I don't know when to sell it, but it certainly is something that's worth selling. Larry, are you looking at semiconductors right now?
Yeah, they've been rallying a bit.
Yeah, they're the best performer for the last 2 weeks on the memory. The memory chip sector is up 4.5%. I'm wondering if maybe we should visit Micron for a possible short level in there.
Yeah, I don't, it's down so much from the high. These stocks, it's very strange, the action. The action is really, really strange. My baby GE is going crazy. It's almost $9, up from 6.
Right.
I'm happy
Did
about
we
that.
trade 6?
6 something, yeah. 670, 660. Whatever. We traded 0. I mean, Micron traded 28. Nvidia traded 120. They love it at 150. Goldman traded 151. It's 180. They love it. So this is the market we're in. These markets don't end well. There will be some big selling at some point. It's just not yet. What I don't understand is what possibly could be the China deal. What could be the deal? What could be the great deal? And I'd love to hear it from you guys. What could be the deal that's unbelievable? They're gonna just give us free money.
Regardless of whatever. Obviously, I have specifics still in terms of that, but the idea is if they were to come tariff, we're starting to see companies are being squeezed right now by these.
I get it, but you're talking about tariffs. So if there's $1 in tariffs, that's more than what there was before. So it's hurting companies because we're tariffing our own companies.
Exactly. So if they reach a deal, that would be gone. That would be good.
They're not going to reach a deal of no tariffs. They're going to tariff the shit out of them, and they're going to potentially agree to it. They're not going to say, oh, we're not going to go in there and go no tariffs. I mean, why would we go no tariffs? Put the tariffs on. We just want them to basically accept a wide-ranging deal that they're going to pay, quote unquote, Trump's favorite word, their fair share of what's out there.
Right.
So it's not listen, it doesn't put us in a more bullish position than we were in a year and a half ago before he came up with this brilliant idea.
Can I add to that? Can I add some of that? I looked at it, Mike and Larry, as a sliding scale. Whereas, because you don't know really what Trump is hyping and what is not hype, I looked at it as a sliding scale. I only looked at worst and best case scenarios, and they were pretty wide. Worst case scenario is in the past was more tariffs and China waiting him out. Best case scenario is kumbaya. Now I see worst case scenario as another 90-day break in tariffs, which allows China to buy more soy and more oil. And the best case scenario is kumbaya. So I don't see the upside changing to your point, but I do see the put going higher. I mean, it used to be all out trade war. Now I see it becoming another 90-day break. So either what used to be we're going to declare trade war and it's going to get worse. I think now that option is now to 90-day break. So I think the worst case scenario is getting better. The best case scenario can't get any better and it will never happen. Whatever that best case scenario is, even if it were to happen, it would be good for stocks, bearish for the dollar probably, and it would be bad for U.S. consumers, either by tariffs that are agreed to with carve-outs for U.S. companies or no tariffs, which also encourages higher prices due to increased cost for things from government reaction to it. But the dollar, I just want to add this, the dollar just is breaking out of a wedge that Tracy alluded to. It's actually, ripped for the last 10 minutes, and it might be a reaction to the U.S. December Small Business Optimism Index. I can't really see a reason why, but it's up pretty strong now. And this flies in the face, for me, of tying it to the trade. I think that the stronger dollar is another flight to safety. So look out below in other global markets. But I just wanted to add that about the trade war or the trade discussions. The best case scenario has never changed. You just have Trump talking more and more about it now. So that means the worst case scenario isn't as bad as it used to be. He'll declare victory no matter what, even if he gives away the whole house, and declare victory. I don't know. That's just a rambling way of saying.
Right. Well, that's what's going to happen. They're going to sign something, whatever it is. It's not going to be held. And, he's going to say he beat China, crushed them. China's going to come out 3 days later in his speech and say he did a great deal for China and it's amazing. And then literally, I would say I won't even give it a week, but potentially a week, Trump will be tweeting his ass off about, all this stuff that China's not doing and they're the worst and they did this and they violated that. So,
well, how unpresidential is it? Forget, I'm not saying forget what you're saying, but add to that in between those tweets now, like today, for example. Today he's quoting other people talking about him. It's like when you read a book and you have someone on the back recommend.
Oh, he always does that though.
But I mean, it's a master of marketing, But you already have the presidency; you have to govern now. Anyway,
we were watching in the office yesterday. It's actually, we should post it on our site.
I was thinking about that one.
It was the greatest video I've ever seen. And it literally was Trump. It was 5 minutes of him literally saying that he's smarter than the generals. He knows more than everyone about this, and all. It was literally 75 things that he knows more than everybody about. So that's what we got here. It's a complete rig. I know that the talks are going unbelievably well. Like, to do what?
You're starting to sound like him. I don't even know if you're paraphrasing him or if you believe that.
No, I'm just making it, I'm making it up. I would think, China would have a bigger reaction than down a little if the talks are doing unbelievable. So they're gonna sign some fake deal. Okay, Trump's gonna say he did an amazing thing, kind of like the North Korea thing, where the guy is now building nuclear bases again and nobody's talking about it. He's been off. He's his best friend.
And the longer this goes on, whether Trump can walk away claiming victory, whether he has it or not, but the longer this goes on without a truly signed end of deal is to China's strength, not ours. And I think you that point was made in the past. Trump's got to get reelected.
Literally, if we do a China deal, I think reaction might be positive, and then it'll be the most negative reaction to a market that we're going to see, and that's when we could go down 100 handles in a day.
Well, the China deal
the
China deal we get is probably going to be what we had before, plus a small thing. Look at what NAFTA is. It's really not much different than what it was. He creates
the doing anything. What are they doing? Come on. Okay, they got him to sign on, and they're going to do a tariff, or they're going to make him pay a little more. Like, it's funny. They were talking about all the money from the tariffs. It wasn't even like the size of a hedge fund.
No.
It's like, what is he thinking? Like, he's thinking like he's running Trump, like the company, not a country. So there's no point to it. I hope it gets out of the way because it's annoying to the market in general, because it actually fuels the fire for up trade rather than down trade. But today there'll probably be a rumor that they didn't do a deal, or it's not going as well, and whatever. It's all fake news.
I do want to throw on the same geopolitical issue, but more domestic. The market just could be the stock market. I don't know what the stock market's doing, but everything else could be moving and more focused on this potential for him declaring an emergency to get the wall built. So markets are bipolar right now, and maybe they're not focusing on the China thing. They're more focusing on the impending war between House Dems and the executive branch.
That's another question that I ask you. What? Explain to me what? Okay, he's going to build the wall.
Right.
Does he actually think people aren't going to be able to get in?
It's a slatted. It's going to be a slatted fence.
No, but I'm serious. Do you think he thinks, like, you don't think people can go under that wall? How are they going to? The same thing goes for now. What's the difference? So they'll dig a hole under it.
All right. That's less trading related. Question on trading. Larry, about your short position. He said, would you consider buying a call against it, opposed to a firm stop? And
yeah, I should have bought a call against it. You could always do that. You gotta buy whatever your stop out price is or lower, and it stops you out. But if you're utilizing a stop the same way, it could, it works the same way. But an interesting way to play that potentially is by selling a put and then selling a call. I mean, buying a call. So you're selling the put, and then you're buying a call to finance the position, and it basically stops you out, and it doesn't cost you any money, but you give up a little bit of the downside. So
you're saying holding a short futures position, selling a put, and then also buying a call.
Right.
Similar value on the put and the call.
Yeah, similar value.
And then theoretically, the put should be further down because of the typical put skew.
Yeah, way further down, probably 4 strikes down versus the call. But yeah, I didn't expect this kind of move. I thought that we'd come in after having a 150 handle rally, or now over 200 handle rally. I was wrong. I let it go a little bit too long, but absolutely, could have used the call to stop it out.
Subscriber Bob Brew implies a question that begs a question I'm going to ask. Given the fact that Clemson destroyed Alabama, do you think it's possible that people were short SPUs as a hedge for long Alabama? 44-16. He called that the good news front. That might be hurting someone's feelings.
Oh, I didn't even watch it. Meanwhile, the interesting thing about that game, I don't know if you saw the stadium, but it was empty. Upper deck was empty. Tickets were going for $20. 50-yard line was going for $100, which has never happened in the history of a national championship game. But I guess that's what happens when you put it in probably the most expensive city in the country, where there is no fans. So if you read some articles on it, you'll see that the ticket sales were off massively.
Yeah, there definitely were a fair amount of empty seats there, and also goes with the way people can plan 3 weeks in advance for the semifinal game, but it's tougher to plan for the final game because you don't know if your team's going to be there, and it's also middle of the work week, and going out to California, it's a bit of a schlep. So.
Wait, where was that game played?
San Fran, or near San Francisco.
So there you go. So basically, 2 good old boy teams are playing in the land.
That was it. Also, exactly.
I mean,
it wasn't like there was a packed, a Pacific team out there. It was 2 southeastern teams.
There were a lot of Priuses in the parking lot.
It was a fun game to watch, though. A lot of activity.
Not the second half.
Not if you're a fan.
That game was over 2 minutes into the third quarter. But anyway, markets are higher. We can wrap it up. There's not a lot to say.
We have a busy day over here. We've got Tony Greer coming up at 10 o'clock. We haven't spoken with him in a few weeks, so we'll get his thoughts on sectors, macro. He's always got a lot to say, so that's 10 a.m. Then 11 o'clock, we'll be back on, talking market update questions, anything you got there. So that's 11. And then 12 o'clock, Mark Fisher, author of The Logical Trader. He's on CNBC all the time. He's been joining us talking about energy, macro, answering any questions you might have. So that'll be noon. And then 1 o'clock, Tom and Vince. I'm not sure, Vince, are you going to be on at 1?
Yeah, sure.
All right, so Tom and Vince, options at 1 o'clock.
Only if I get to draw on the screen a little bit.
Yeah, that drawing was good. The whiteboard was nice last week.
We have to work the split screen. Anyway, we'll talk about it off the air, Mike. I'm sorry. Go ahead.
No, but that's what to look forward to there. Good options seminar at 1 o'clock. So Tony Greer, 10. Then Mark Fisher, 12. Tom and Vince at 1, and then throughout the day questions. It'll be an interesting day. Right now, S&P's up 24, Nasdaq's up 99. A lot of different topics, definitely to talk about throughout the day. Crude's up $1. We're trading at 49.50, pretty much on the high of the day. Yesterday we traded up to I think about 49.80. I know Tracy was looking to fade at around the 50 level. I don't think she pulled the trigger, and then we came off, but we're getting close to getting back up there. She's going to join us tomorrow to talk about the markets, technical analysis. Natural gas, $3 even here. Dollar, like Vince was saying, is stronger. Gold has drifted off from 1,300 a few days ago. Now we're 1,282.
Right.
So that's the plan for the day. A lot to talk about. We'll be back to everybody in a little bit.
All right. Good luck, everyone.
I have a level I'd like to share since we're all looking at the S&P today. On the gold system, the market has already triggered it, and I didn't participate. But the S&P above 25.66, 68 is a long, and a reversal below that. So we may be getting near level. When I get signals like that, I have noticed that we frequently, Larry, from opposing systems, we get close to a level that you like to sell. All I'm saying is I'm considering getting long right here with a stop at 25.60, spot 60. So see you in the chat room, and we'll see if I can do anything with that.
All right. Good luck.